All right, glad to be here with everybody. I'll just jump right in. We have a short amount of time and we have a wealth of knowledge up here. So I'm Corey Thane, I'm with Circle. I think Tyler and Luke need no introduction. If you don't know them, you have not been paying attention because they were the drivers of Genius and now driving the rulemaking process, which I think all of us here are very interested in. So you guys have had a huge year, tons of accomplishments for the administration. So maybe we can do a quick recap and then go into a little bit about Genius Act implementation.
Sure. Is this on?
I think you're on.
Well, I'm glad to kick it off, and I just one slight correction. I think the driver just left the stage, but we were glad to support the process and glad that it got done. I think that just from a level-setting approach, we've accomplished a great deal from the beginning of the administration relative to digital asset policy making in the United States, and we're proud of what we have done. We sort of started from a framework that dated before the administration started, where we needed to reset the approach to digital asset policy in the United States and recognize that the technology and the industry is here to stay, and it's much better for the United States leadership globally if we can enable that to exist in the United States. So we really thought about what is the approach to making sure that happens, and it's sort of three things from my perspective as I think about it. It's sort of like a stool, and you have three legs of the policy stool in the United States, and we've accomplished a good deal of that. The first one was Genius, getting that enacted in the United States, recognizing the good work that the states have done, and enshrining sort of a dual pathway for that marketplace to exist in the United States from a federal perspective. And then the second one is, I'm sure everyone saw the comprehensive report that we published at the end of July. There's 111, I think, recommendations in the report. Maybe that's not exactly right, but it's quite comprehensive and covers everything from stablecoins to banking regulation to tax issues to market structure and so forth. So that was a big accomplishment for the administration to put on paper exactly what we want to do, so there's no guessing for the industry in terms of where we're going or what we're working on. And the last one is market structure legislation, which we're actively working on, and we're excited about the prospects of seeing that enacted. Luke, I'll kick it to you, see if I missed anything.
Yeah, I mean, I think if you zoom out from what Tyler said, this year has kind of kicked off really a pivot in approach from the federal government as it pertains to digital assets. And I think what you're witnessing is creation of momentum, and we've seen concrete legislation, we've seen the administration and all of its entities really act in unison to start supporting the industry. And so I think what we're trying to do is foster the development of this technology here in the US rather than overseas, and a lot more work is needed to be done, but you know, we're well underway, and we've started that momentum.
Yeah, I think sometimes people forget that for years this industry has been trying to get legislation on the board, and this year, it finally came to fruition. So what do you think about the significance of that for both our financial regulatory system, and then you also mentioned international, where I think there's a lot to be said?
Yeah, I'll start. I mean, I was in the industry prior to coming into the administration. Like, oftentimes the question that we would ask ourselves is like, should we do whatever we want to do here, or should we like think about where else to do it? And I think that's no longer sort of the question in the industry. And I was on a panel, I think 2 years ago, and at the end of the panel, the question to everyone was like, are you staying in the United States, or are you going? And I think that paradigm has like drastically shifted. So we should all recognize that. What was the second part of your question? I already forgot.
Well, on that point, just anecdotally, I mean, in my previous role in the Senate, every week we'd have companies come in to talk, and they would, you know, up until November of last year, it was consistently we were exploring alternatives given the regulatory hostility we're experiencing here in the U.S. And so it's helpful to, you know, as a data point to see just how important the tonal shift is. But like you mentioned, passing Genius Act, codifying that into law, which is not subject to the vicissitudes of administration. And then obviously we have implementation to kind of carry that forward as we work with on market structure as well. The permanency and the certainty, not just for the next 3.5 years, but the indefinite permanency and the stance of the United States government that this is a technology that we're embracing here in the U.S. it's hard to overstate.
Yeah, and just in addition to that, I mean, the president very early on in the administration issued a couple executive orders on digital asset policy, and I think they're like really important for a couple factors. One, it established the White House working group. It established the existence of a centralized policy function in the White House that would work on this and serve as a conduit for any information flow from the industry and for Congress and what have you. So there was a nucleus that could support the industry from a policy-making function. And then, you know, my existence at Treasury, like, it never was there before, and now there's a person that you can come talk to and a team that you can come talk to at Treasury. That exists across many cabinet agencies. It exists at the market regulators. So the dynamic has just shifted where you can come talk to the government and not feel as if it's going to be a hostile engagement. Like, there's genuine curiosity of what builders are working on and what issues they're confronting from a policy and regulatory lens.
So, and if you haven't read those publications they've referred to, you should, because there's a roadmap there. But Treasury this year put out a huge ANPRM. I think you guys got like over 300 responses to that, which is incredible.
Over 400.
400, okay. So, sorry. But not everybody's familiar with the luxury now that legislation's on the board of having an interagency process and rulemaking, and Genius directs the agencies to write rules on liquidity and operational risk management and things like that. So can you describe for everyone how you're going about that work in coordinating with OCC, FDIC, Fed, NCUA, the sort of like alphabet soup of financial regulators?
Sure, I can kickstart, and Luke can fill in anything that I miss. I kind of think about sort of the regulatory implementation as a jigsaw puzzle, at least as, like, I have worked on jigsaw puzzles throughout my life. You start with the borders and like you fill in the middle, and like it's easier to figure out where the pieces are. So we did a couple things that we needed to do to sort of kickstart the process. Treasury's terrorism and financial intelligence vertical, they put out a request for comment on innovative techniques and what technologies could be utilized from the industry's perspective to interdict illicit finance. And then we did the comprehensive PRM, which you discussed earlier. We had around 60 questions, I think, that we asked, and we got troves of industry engagement, which is quite good. And it gives the public a way of interacting with the government on sort of a defined rulemaking agenda. The next step in the puzzle is we'll get to a point in time where we release like a notice of proposed rulemaking that'll contemplate sort of the next step in the process. I don't have the timelines or anything to project here, but that's what we're working on behind the scenes. We have regular engagement with our banking colleagues, whether it's the OCC, the Fed, the FDIC, the NCUA, who have equities under the Act. And those engagements are quite robust, and we talk about issues that are confronting the policymakers and the different banking regulators. That's what we're working on.
I mean, put otherwise, for those of you who are, digital assets only, this is, I think, standard procedure in the banking world. But the rulemaking process, it's an involved and very time-intensive process, and so it's a long effort that was kicked off, obviously, with the Genius Act, and you've seen the beginnings through these announcements that have been made. But it helps with the durability of these rules, but it also means that the process takes a lot more iterations with the federal government, with industry, with our stakeholders in the government. And so it's an all-hands-on-deck approach that we're taking here.
And really, it's all hands on deck at Treasury too. I don't know if people in the audience know how Treasury is structured, but it's a huge institution. At Main Treasury, there's 3 core verticals. There's domestic finance, there's international affairs, and there's terrorism and financial intelligence. And each one of those component pieces under Genius have equities at play under the Act. And my office and my team, we serve as sort of a conduit to bring all of those together, which is, one of the benefits of having the existence of an office working on digital asset policies. You can serve as that conduit across all 3 verticals, and then you can have engagement with the bank regulators as well.
So rules have to be written by January 2027. Another reason why it was so important to get Genius on the board when we did, right? Because there's only so much time to get those rules out. When would you expect, like, first text, roughly, to start rolling out? Things come out on a rolling basis, right? Like, it's not all just dropped at the same time. So do you have any rough sort of timeline on that?
I'll be a good Boy Scout, and no, we don't have any specific time frames, but we're working on it as fast as possible.
Yeah, okay. How about working with the states? So I think one of the very unique things about Genius is the way that it balanced our unique federalism issues. That was a tough thing to work through, and I think it landed in a very good spot. But now you guys are implementing, so talk a little bit about that.
I mean, one of the core principles of Genius was preserving that dual system, allowing the option to stay as a state-regulated entity or to move to a federal regulated entity status. And that requires a unique type of interaction with states. You have a very wide range of approaches across industry, across states, in terms of how they've approached digital assets to date. And so I think that not only have those conversations started, especially with the more sophisticated states that have leaned in, but I think it's also spurred states that might have sat on the sidelines to get more involved and to start reaching out to us. But they all, like Tyler mentioned, kind of go through the Office of Digital Asset Policy, which never existed before this administration. And so, Tyler's been taking the lead on a lot of those conversations.
Yeah, and I would say that at some level in the future, you have what Genius contemplated, which is having this dual system at a state and federal basis, and it imagines like sort of what a baseline approach that would exist that would be enshrined in law and enshrined in rules and regulations. Like that's what we're working on, and then there's another piece of it, which is sort of the international side of like what comparability and what rule book or sort of jurisdictional harmony looks like between the United States and other jurisdictions across the world. So it's something that we're acutely focused on. Our international affairs team and others across the building, including myself, like we talk to international regulators quite a bit. So there's lessons learned and what has happened outside the U.S. that you can borrow from at times, and we have good dialogues on that level as well.
Yeah, and comparability is the watchword there.
I mean, it is a word that you can watch for, sure. I would call it more of that you have both sort of the jurisdictional parability and then you have comparability. It is both of those things.
Okay. Tell me how you think about licensing. I think Circle's obviously going to go and get licensed, but we've seen an explosion, right? And that's one of the interesting things about Genius is it's pro-competition, it's pro-American economic competitiveness. I think it's pro-consumer. And so we've just seen like this outpouring of interest of, coming to the government and potentially launching a stablecoin.
Okay. I mean, I think about it from a perspective as Genius contemplated this licensing regime that could exist across different regulators of different contours. Obviously, you have the states, and then you have the federal prudential regulatory regime, the FDIC, the Fed, the OCC, and the NCUA. And so it contemplates that each one of those different regulators would have their own licensing regime. And so, there are component pieces that Treasury has that we're working on, and there are component pieces that the regulators have that they're working on. I would say that's a little bit more in like their jurisdiction of what they're working on from an actual licensing perspective, but the act, as far as I could understand, contemplates that it would exist across those bodies.
And if I could just note, I think some people during the drafting of Genius pointed to that as a potential flaw of having maybe a balkanized federal framework. But I think what that does is allows for different business models. Banks are much more comfortable with the Fed as their primary regulator, and for them to integrate this technology versus the OCC, which might be a little bit more nimble in terms of different business models wanting to come and register with them. And so I think we've created a friendly competitive dynamic between the different regulators to make sure that they're harmonized to make sure there's no arbitrage, but to allow for flexibility for different regulatory types, for different registration types. And I think we're about to see some of those nuances kind of come forward with the proposals and the rulemakings that come out in the next year or two.
Excellent. Okay. So let's shift gears here for a minute. So we just saw Senators Lummis and Gillibrand talk a bit about market structure, and I don't think that we need to cover all of the same ground as them, but for years, when I went out and talked to international regulators, they were saying, hey, when is the United States going to move on stablecoins? We see this instrument being used within our country, and we're sort of like dragging our feet. We're waiting for the United States because it's 99% dollar denominated. Now I'm hearing in those same conversations, when's the United States moving on market structure? MiCA is in place and has been for almost 2 years. So from your view, what's the consequences of inaction in the United States?
I'll just start off. I'll say that they're dire, and I think inaction is probably the worst outcome here because you're only incentivizing companies to move overseas. But if you draw the parallel back to Genius, I think there was complacency among our international peers. If you rewind a few years, that they didn't expect anything done. They expected whatever we would do would be in line with some of their overly restrictive legislative proposals. And then we came out with Genius, and I think most of our, the other jurisdictions that were vying for the business were kind of caught off guard by how practical and how well drafted the bill was. Obviously, I'm a little bit biased in that sense, but I think that what you're going to see hopefully is the same dynamic, whereas it's taking a little bit of time. We're pretty substantive conversations are underway, and we have the opportunity to really lead from the front here and provide the clarity in market structure that will, I think, similarly position the rest of the digital asset community as the most friendly but also well-calibrated regulatory framework here in the U.S. versus our peers.
Yeah, I totally agree with what Luke said. I would just add that I can't think of any other product in financial services in which we have exported the thought leadership from a regulatory or policy perspective to somewhere else in the world, and the consequences of us doing that in this ecosystem, in this environment, I think would be pretty dire. So it is a core component of what the president has called upon Congress to act upon, and the administration is fully behind getting something done, and it is the third leg of the stool that I talked about earlier, so I think it's imperative to have the U.S. lead on this front.
Well, and Luke, I think you've earned the right to have that bias, so, and I agree with you. So are there other things that either Treasury has authority that exists today or other regulators? I mean, we've heard about from Mr. Atkins that the SEC might move forward with some rulemakings under existing authority that would affect market structure. So how do you think about that vis-a-vis legislation?
Well, I think they're complementary, and we talked about this in great detail in the report that we released at the end of July. The preference and the desire from the administration is 100% to get market structure done. In the absence of that happening, and while that's happening, it doesn't mean that there aren't other things that can advance the goal of making the U.S. the crypto capital of the world. So you'll see in the report, if you remember back to the section, we laid out, it's here's what you can accomplish today, and here's the goal and the framework for durable legislative activity. So I think that's entirely right. There are things that can be done at Treasury that we're working on. We've covered some of the tax issues that we wanted to work on that we put in the 180-day report. We released guidance on CAMT. We did the revenue procedure on staking and ETPs. So there are things that we're ticking through. I would, it doesn't happen as fast as I'm sure the industry wants, but trust me, it happens as fast as we can make it happen internally. So there are things that we are working on. There are things that other members of the Digital Asset Working Group they're working on. We have regular meetings every week to talk about the progress that we're making on all of the recommendations in the report. So maybe it doesn't seem like it, but we're working as fast as we can.
I think you're working very fast in government terms. I mean, you've pointed it out, but the fact that there's an office dedicated to this is a real sea change and helps move things in the building. So let's talk a little bit about banking and regulatory clarity. I think many of us felt pressure would be a light word in the previous administration. there was an element of unfairness that was undeniable, right? And so this administration has made a lot of changes from a banking perspective. We heard Comptroller Gould yesterday, I think, make some news, right, with his approach to chartering. But are there other, banking changes that you guys either were involved with or are just aware of? And what impact would you expect those to have?
Yeah, so I think out of the gate you saw rolling back of guidance and of supervisory pressure that was applied across the board. And while that might seem light, I think the impact is hard to overstate. When regulators are able to influence banks' behavior through guidance, through on-site teams, they can really shift capital allocation, from banks and the connectivity that their clients have to the financial system. And that's what we saw, I think, in spades in the last administration. And so if you look at the kind of constellation of what might seem like minor rollbacks and tonal shifts from the banking regulators, that amounts to a pretty big unlocking of economic activity that banks are allowed to participate, whether it's custodying digital assets, whether or not it's banking and engaging with companies involved in the space. So that, I think, was the kind of the first true step, and I think that you're going to see in the coming year or two a continuation of that in a more durable way, in potentially in rulemakings and in more kind of robust methods.
I agree with everything Luke said. I would also just add, you can look on Twitter every day and you see different activities from different banks who are doing things in digital assets. That was not happening a couple years ago.
Yeah, and when I used the word light, I meant polite. It was more than light pressure. How about, are there other changes that you think banks are going to need to make to sort of like enable the use of stablecoins? Either, one of the great things about Genius, and it's part of the pro-competition element, is you can be a non-bank or you can be a bank and be an issuer, right? And I think a lot of banks right now are going through this thought process of, do we build, buy, or partner? But this will be a change. I mean, if you're a bank issuer, you have to be a standalone subsidiary that doesn't engage in maturity transformation or take risk, which is what banks do, right? So,
yeah, I think as of 2025, stablecoins are here to stay, and I think that message has started, internalized by the banks. And so, like you mentioned, I think based on different business models, different risk appetites, different tech budgets, or what have you, there are a range of approaches that we're seeing across financial institutions, but the common theme among them is that they're looking at ways to integrate it for the efficiencies they bring, for where the industry and where the consumers are going. And so I think you're going to see different approaches, different types of integration, which will hopefully unearth what the best possible outcome for consumers here.
I don't know if I have anything substantive to add on that. I think your question was a little bit about like, what do the regulators need to think about relative to the banks? I guess it's a different technology, right? So to the extent that you are underwriting from a institutional level, how to encapsulate different types of third-party service providers, there's just a new layer of understanding the technology that is different than what is today. And I think that will be part of a learning curve piece for traditional financial institutions, whether it's bank or credit union. So they'll have to rely upon and work with the industry, which I think is a good thing, because the more that happens, the more that there is sort of a mutual understanding of each other's goals and desires and where they see the future going.
Yeah, and I'm assuming you've gotten quite a few comment letters from the banks in response to the ANPRM. Safe to assume?
We receive a wide range of input from different stakeholders.
Got it. Okay. All right. So, Luke, I'm wondering if you might be able to touch on payment systems and how stablecoins might interact with tokenized deposits. There's a lot of discussion about that. Most of us are probably aware of the differences there, but you might want to just touch on that. And then, RTP FedNow, which I think, frankly hasn't gotten a lot of uptake. And so, how might these all work together? Are they going to be in perpetual competition? Is there potentially synergistic effects? from having stablecoins be so ubiquitous?
I think in the pre-Genius world, there was a hope that there would be maybe a stemming of the tide of stablecoins from a lot of these legacy systems. But I think once the adoption started to show itself in the industry, once you saw kind of the more established players want to integrate stablecoins into their payment rails, you've seen a few things. You've seen the legacy systems look at ways to integrate stablecoins, look at distributed ledgers, et cetera. And then you've seen alternatives and challengers arise. And I think, as you mentioned, some of these kind of consortiums that might be forming among traditional finance, you're going to see more choices, more methods, and more innovation in this space that I don't think would have been, it would have been decades off in absence of this development. And so I think long story short is, I don't know exactly what it's going to look like, but I just know that there will be more alternatives and there's going to be more pressure for innovation among the incumbents that have existed in the industry.
Yeah.
Let's talk about national economic competitiveness for a minute here. So there's been a lot of discussion about the idea that the purchases of treasuries that back stablecoins could be really great from a macroeconomic perspective, financing our debt, and the like. You have a unique perch as Assistant Secretary for Financial Institutions. Walk me through the way that you guys think about that.
I think if you look at the president's comments about his support for the bill, that is one of the primary legs of the stool, to use Tyler's analogy. As more demand for stablecoins starts to arise internationally and domestically, naturally given the backing and the guidelines of Genius, you're creating a new source of demand for treasuries. If you look at the aggregate holdings of stablecoin issuers right now, it's already a formidable number. And so we expect that to grow and to be a new source of demand for treasuries. And it's a secondary benefit, I think, if you're looking at it from the industry's perspective. But from a macroeconomic perspective, it could be pretty significant. And then beyond that, if you're looking at the adoption internationally, it's a remarkably rapid way of integrating dollars into economies around the world and cementing the dollar's place as the reserve currency of the world. And so it's exciting. I think we're entering a new frontier, and there's probably going to be a lot of research and developments on this front, but it's certainly an exciting time on that space.
I don't think I have anything substantive to add other than I would say that you see private market participants and like research shops publishing sort of growth estimates of what could happen over the coming 3-4 years or what have you, and like the private market estimates are like quite robust. So I think that it is a a benefit and a very good outcome from Treasury's perspective, and our boss has talked about it a number of times in different public forums of how the existence of like having a federally regulated stablecoin market in the United States is good for treasuries.
Yeah, I mean, we see it with ubiquity of dollars. We have something called the Circle Payments Network, where we pre-vet participants in the network. They can hard code in compliance with the travel rule. They can agree with the originating financial institution, can agree with the beneficiary financial institution, what the exchange rate will do, and have that happen instantaneously, essentially, right? And that's very powerful. We're also seeing like countries, a lot of conversations about their monetary policy within their borders. You have places like Argentina who are saying essentially we're willing to dollarize, and other places where they're not, but the Genius allows stable coins to essentially travel internationally and then maybe be met at the border with a change into the local currency if that's the regime that country wants to follow. So we're seeing what you're talking about firsthand. One other shift here, so tax. So Senators Lummis and Gillibrand also addressed this, but I think it's top of mind for many of us here. There's the de minimis issue, which is a big one, but are there other things that you guys think about as far as tax or stuff that came out in the comment letters in response to the ANPRM?
I'm not sure specifically about the ANPRM. I'll need to go back and refresh my recollection, but at least in the items that from a tax perspective that we want to see happen in the report. We listed out dozens of things that we are working on from a tax policy perspective. There's priority guidance matters. There are things that we think are best solved by Congress. So we have been engaging as much as we possibly can through my team and through the Office of Tax Policy and the IRS to try to get durable tax legislation done. I think the prospects are pretty good from my vantage point, but that's what we're working on.
Nothing to add.
Nothing, Tyler covered it.
Got it, okay. And then, Luke, I think you used the word durability earlier, right? So, and you guys have described the North Star in the rulemaking process, but specifically, what do you mean about durability and like making sure that stable coins are here to stay?
Yeah, I mean, if you just draw the comparison to where we were a year ago to now in the administration and the government's approach to digital assets, the risk of the pendulum swinging back and going to Operation Choke Point 3.0, all that is very real. And so I think some of the driving principles that we all operate with are to make sure that what we're doing is sparking innovation and adoption in this space, but also providing clarity that's not easily changed in a bad way, and that provides a more durable certainty for the industry. Because absent that, I think there will still be hesitation. There'll still be activity sitting on the sidelines or hedging internationally. And so as much as we can do to ensure that there's a long-term guarantee for the rules of the road, clear frameworks that will not be immediately peeled back, I think the more robust the adoption here is in the U.S.
I would just add that rulemaking and the Administrative Procedure Act, it takes time to do. You go through publications of proposed rules, you get comments back, you synthesize them, you then move forward into finalizing the rules. All of that stuff takes time. So had we have not gotten Genius done where we did in the timetable in the administration, it would not have created the momentum that we have today to getting durable rules done, as Luke has talked about, but also created sort of the opportunity and the space for the market structure legislation to get done as well.
Yeah. And fair to say, you've got to cross all your T's and dot all your I's, or it's subject to challenge from the bad guys who want to challenge it, right? We're running out of time here, but final question. What can this group has a big voice, right? Like, people have become politically active, people understand the stakes and sort of like how to work in Washington. What can they do to help you guys do your job to the best of your ability?
I'll just start by saying that, the feedback and understanding the implications of what we're working on businesses, on the consumer, that lens is sometimes hard to adopt just from the government standpoint. And so as much context as we can be given from participants in industry, from people who are steeped in this space, the more well-informed we are in rule writing and in advocating across the federal government. And so I would just say continue with the touch points you have with the federal government, expressing how policy changes might impact your business, the country more broadly, and I think it's extremely helpful and sometimes underappreciated. Obviously, we have open door policies now that might not have existed last year, but I would just say take advantage of the access that you guys have to talk to us as policymakers.
Yeah, I would just echo that. I mean, when we wrote the report, we reached out to like hundreds, and I don't know how many meetings I had. I counted them at one point. It was like over 750, and I stopped counting. I would say come see us and talk to us, and like lessons learned from around the globe too in other jurisdictions, like that's always helpful. Particularly as you're seeing other sort of major hubs across the globe as they're looking at digital assets, like they might be thinking about things in a different way. Sometimes that's helpful to us, and it's always good just to like learn what other people are doing. And sometimes, you know, our international counterparts, while we have like robust dialogues with them, you might have a different conversation. Yeah,
and I think it's important to remember that everyone here understands your own business. And we have a shorthand way of talking about some of these issues. But even today, I'll go in and talk to an office or talk to an international regulator, and they'll have a misconception about something. So I think that you can't underestimate the importance of of education, education, education throughout, the legislative and rulemaking process. But let me just conclude by saying I think this room and all of us owe a great debt of gratitude to your former boss, Luke, Senator Hagerty, your current boss, the president, and the secretary, the Treasury, and I just hope that the room will give them a hearty applause for all the great work that you guys have done. And thanks for being here today.
Yeah, thanks for having us.
Thanks for having us.